Hi, everyone. As we embark on a new year and a new chapter in the value-added tax regime, VAT compliance becomes the need of the hour. And we've seen many areas that demand a lot of attention. Here today, we're here to discuss 24 pointers to be considered for 2024, where we're going to be discussing standard rated supplies, 6 pointers, as well as 6 pointers for other revenue supplies. So without further ado, let's dive straight in. So Ria, what can you tell us about standard rated supplies?
Thanks, Rishi. Yes, over months, years of working with same clients or different clients and across industries, these are some of the points that we have noticed that clients often make a mistakes in the outward supplies. One of the major ones being reimbursements. A lot of companies and entities think that just because transactions are going with their sister companies or related entities, they do not trigger the VAT, but that's incorrect. And these transactions need to be analyzed and scrutinized further. And taxpayers need to understand whether a transaction is reimbursement or disbursement and then apply VAT accordingly. So the next point is a smaller point of the same first point of reimbursements, and that's employee recoveries. A lot of entities often undertake expenses on behalf of their employees, whether it be visa costs, whether their personal phone bills, etc., and they fail to charge VAT on these invoices. And hence, taxpayers and the entities need to ensure that the correct VAT treatment is given to these transactions. Another example that we've often seen in across industries, especially in the FMCG sector, is when samples are distributed free of cost. Now, what are the VAT implications in this? A scrutiny needs to be done, whether it's a marketing expense or if it's not. If it's done to promote a product, input tax recovery can be made, but also these charges, these samples can be distributed without charging VAT on it. But say if it's given to employees, if a product is nearing expiration, for example, input recovery has to be blocked or you need to probably charge VAT on that. Mm-hmm. So a scrutiny needs to be done and each transaction needs to be analyzed carefully. In the hospitality sector, the catering, the hotels, the restaurants, often this industry works a lot on advances by the customers, the bookings that you are done. And the supply is much later in time. And hence VAT is triggered when the advance payment is made rather than when the supply is made. Now, certain points are across all industries. Say, for example, your date of supply or your invoicing. If a transaction is subject to VAT, it's not necessary that your obligation ends there. No, it does not. Have you reported it in the correct period or not? That itself is important. So your date of supply rules really matter. Are your invoices in check? Is there a sequence to your invoice? That really matters, because even if there is one invoice which is not in sequence or a sequence is missed, the authorities can raise a question on that. Now, it's often noticed that a credit note needs to be raised for certain reasons. So now there's also a time limit to that, which we've seen taxpayers not comply to. You have 14 days to raise a tax credit note from the date you think the obligation arises. So of the 24 pointers, these are some of the 6 pointers which are specific to industries and overall. Rishi, would you like to take us through other set of examples?
Yes, Ria, thank you so much. Absolutely. So thinking of other revenue aspects as well. Firstly, you think of sale of goods within a designated zone, which falls under the ambit of being out of scope. Now, again, it's important to remember that it's highly conditional, right? And the condition being that the goods should not be consumed within a designated zone. So to substantiate this, documentation needs to be maintained. So perhaps a declaration from the customer stating that these conditions have been met. Thinking of out-of-scope supplies again, there are various forms of out-of-scope supplies. So you think of your disbursements, you think of your inter-tax group supplies, you think of drop shipment. These are all out-of-scope supplies. But again, it becomes important that taxpayers need to reconcile all these transactions and ensure in high detail that the conditions are being met for all these cases and the treatment is substantiated, right? Then a common one, export of goods, right? Mm-hmm. Now it's subject to 0 rating where you export goods outside of UAE, but it's a very contingent on the conditions being met. So documentation becomes very, very, very important here. And we've seen many, many challenges from the FTA where documentation is not maintained. You think of your customs declaration, your exit certificate. So these aspects to substantiate the treatment need to be kept. On similar lines, you have export of services as well, which is, again, highly contingent on conditions being met. So in cases where you are supplying services performed on goods or real estate located in UAE, or let's say there's management presence of the customer inside the UAE, then there would be challenges for the treatment of zero rating, right? And moving on, you have domestic zero-rated supplies, which along the same lines is, again, it relies on conditions being aligned with your nature of supply. But, common examples that you see for zero-rated supplies, healthcare sector, right? Supplies for healthcare supplies are zero-rated, but ultimately if it's provided to the end patient. So aspects like these need to be carefully considered so that the treatment is aligned, right? And finally, you could think about exempt supplies as well in a very similar stance. It needs to be, reviewed in great detail. A very common area that we see practically that we've observed is that residential income, right? So residential income is exempt, but again, if it's purely residential income which is being provided as a service, where it's composite with some ancillary services, then the nature of the transaction changes, the treatment changes. So it really requires some deep dive into what supply you're actually making. So these are some pointers for the other revenue aspects. And we have concluded part 1 of this 24 pointers to be considered for 2024. Stay tuned for part 2.